Welcome back everybody. So this is gonna be a quick update video for you guys on stock market, and before we get started, please smash that like button, and 100 plus likes on this video would be greatly appreciated guys. And if you're new here, consider subscribing. Now if you want to get my daily trade ideas, swing trade ideas, live trading, and you want to support the channel, definitely check out their link down below in the description for Patreon. Welcome back, everybody. So, what we got here on stock market today? We got Dow Jones going down 0.77%, Nasdaq going down 1.49%, S&P going down 1.11%. We got Russell going down 1.46%. Here's 11 sectors that makes up S&P 500 on top. We got energy, utilities, but you can see everything pretty much in the red. Now, stock market map, and this is where things will get interesting. This is end of the year, and you can see Meta down more than 0.5%, Google down 1.45%, Tesla down whopping 5%. But you gotta think that thing went up too fast, and now it's pulling back. Amazon down 1.45%. Apple also finally taking a beating, down 1.32%. We got names like PLTR going down near 4% today. Finally, it's going to play out at some point. It's just going straight up, right? Microsoft also going down 1.73%, Nvidia down 2%, and if you look at all these banks right here, all these are down. So pretty much we got a red day across the board, except few names that are actually up on the day. And mostly, these big names, they got to be down today, like Nvidia, Microsoft, Apple, Amazon, and especially Tesla took the big one down near 5%. Now, quickly, what we got here on fear and greed index is reading at 34. So, fear is here to stay, and we saw the volatility spiking today. So, that is something to watch. Especially, we might still get that Santa rally end of the year into New Year. And that could be, starting Monday. So, I'm not fully rolling it out, but also things are not looking good in the market, guys. Do we have anything next week big going on? Well, nothing really. Chicago PMI, and then we have mortgage rates, 30-year, and then we got also ISM. So nothing really big going on next week. And Fed's balance sheet right here. So nothing really much to talk about next week, except what will happen the way we closed today here in the market. On VIX, it's up 8.28%. So VIX was up almost 21% today. And you can see it right here, massive rejection at 18, and then came back and now trying to hold a $16 as a support because we have this red line, 5-day moving average, now sitting near 16 bucks. So that's going to be a line in the sand for Monday near 16. But if this thing opens under 16, which is under 16 as of right now, then you're going to see a flush down to 15, and from there it can go much lower, like $13 or even lower than that. Now to the upside, if this is something that's going to take place next week, it's going to hold 16, and maybe we will see a breakout over 18. If that happens next week on VIX, you're going to see a move back up to 20, and that can put a lot more pressure on S&P 500. On SPY ETF, it's down 1%, so things could have been really worse today than what we got at the end. Because if you look at my screen, we came down all the way down to 590.76, and then we ended up closing over red line 50-day moving average 592.67, and that's holding. And we got a gap down, so there is a huge possibility next week, maybe Monday, we get to see SPY going up to 598 to close this gap right here on top. Also, we got this downtrend, so watch that right here. Unless we get over, I would say 604 right here, we're actually not in an uptrend on this daily time frame. So going into Monday session, guys, your key line in the sand, and I would just make things even, and I would just round things up here. 593 right here. 50-day moving average. Underneath that level, 590, and then 586 next support. And don't forget, if we take out this low down here, which is like 581, we will definitely come down and close this election gap 576.74 to the upside. Now, there will be resistance at the 5-day moving average, and I would say that's 597. Over that, we have this gap 598 that can actually act as a resistance right here on SPY ETF. So watch out for that. But if this thing clears all that and gets up to 600 and possibly takes out 604, this trend line, in that case, you're going to see a move back up to previous all-time highs right here, 609. On triple Q, it's down 1.33%. So we came all the way down to 517.86, went back up. And if you look at my screen, closing over 520 and also under 523.58 20-day moving average. So going into Monday session, I mean, yes, we got a pullback, but also buyers actually doing a great job at the end and picking up the dips, and you can see the longer wick right here on this candle, so that is looking good going into next week, even though we got a red body bar today. So going into Monday session, there will be support at 520 underneath that level right here at, I would say, 515 to 516. This previous all-time high will act as a support, and underneath that level, watch out for 508 and then 503. Now, resistance will be right here at 523.58. We can get over that, then watch out for a move up to 527. And if we can actually clear all that, this thing heading back up to 533 again. On Dow Jones, it's down 0.74%. So now it's holding, or at least trying to hold, this 5-day moving average, which is sitting near 430. So 430, that's going to be a line in the sand. Watch out for that as a support Monday morning. But if that gives up, we might be coming all the way back down to 423. To the upside, there will be resistance at 433. And if we can clear that, you can see a rejection again here. If we can clear that 433 range, it might go up to this 435 to retest this red line 50-day moving average, and over that you're going to see a move up to 439, and that's going to be huge if that happens next week. It's going to break out of this downtrend if that happens. Now, your key line in the sand, 430. Underneath that level, this thing can flush down to 423, 421.36, and then 416. On IWM, it's down 1.46%. And if you look at my screen, came down to the next support, which is 220, held the support, went back up, and now it's not holding 223 5-day moving average right here. So it's slightly under that level. If we can get over 223 here on IWM, can hold this blue line 5-day moving average as a support going into Monday session, we might see a move back up to 227 right here on IWM. And over that, there will be plenty of upside all the way up to 230, and perhaps will come up and retest negative sloping 20-day moving average 232.13. Now, 220 gives up. That is when things will not look good for small caps. You'll see a flush down to 216, and then we have this gap that can come into play, 212.78 on IWM. So just quickly, I want to show you guys that dollar here also remaining strong, and pretty much you can see it's kind of in this wedge pattern, and maybe we get to see another breakout. And if that happens, well, we will see deeper pullbacks in the S&P 500. Now, also these things are a bit overextended, so it's easy to see dollar pulling back 3-4%, and if that happens, we will see S&P 500 getting a final rally next week, and that could be the center rally that we're waiting for, and we might get that. Now, also on 10-year yield, and a lot of people don't even get it, like why these things are going up and why the market coming down. When they go up, market usually comes down, and you can see this thing is up again today. I mean, this is crazy. It's still going up on a straight line. So if they were to take a back seat for maybe 2-3 days, maybe a week, we will see some sort of a rally in the market. So be careful, especially shorting into the hole at this point. Yes, market has not seen any significant pullbacks within last couple months. Yes, we got pullbacks, but it was like 1 day or 2 day, and then market does the V shape. So it's a risky environment here in the market. But with that being said, I mean, market can still climb higher if we get some sort of a pullback in the short term. And I'm talking about a short term, tiny mini rally. I'm not talking about some gigantic rally where SPY is gonna go and hit 800, next week or next month or next year. That is not what I'm saying. In the longer run, what I think is going to happen when new president comes into the office, we might get that correction that we all been waiting for finally in the market, and that can happen with Trump. It happened before many times, and it could be also sell the news because when he got elected, what we got? Gap up and go. Now he will be back in the office, and it could be, sell the event news. And if that happens, market will likely to come back and close that election gap. That's all I'm trying to say, guys. So stay safe. Merry Christmas, Happy New Year, and I'll definitely keep you guys updated.